Well, the last time I saw Arrie Rautenbach, Chief Executive of Absa, was in Davos in May. Unusual Davos time. Are you going to the January meeting?
Yeah, no, thanks, Alec, and thanks for the opportunity. Yeah, Davos sounds like a long time ago. That was May. Strange to be in Davos when it's sort of in summer, not in winter. But we are already looking at next year, so Absa will definitely be at Davos. We see that as part of our annual calendar now, because I think for us it's a great opportunity to plug in with the global conversations and getting a sense of what's happening globally, what that means for us.
Yeah, it's true. I've been going there for many years, and it's every time I come back from it, I feel better informed, more understanding what's happening in the world. But Absa is an interesting business because at one stage, it really was globalizing aggressively. Then it came back with a Barclays acquisition or controlling stake to being very much more focused on South Africa, then Africa. Are you looking to other parts of the world yet?
Like, I think you talk about the Absa history. I think we've got a rich history, and we were part of a global bank when we were part of the Barclays structure. I think with the announcement of the Barclays disinvestment in 2016, for us was a great opportunity to reimagine what Absa stands for and the sort of legacy that we want to own. And I think since then we started rewriting our own story. So we've actually for the last couple of years been on that journey, and as we now setting into our next horizon, we are beginning to get a sense of what does our vision look like for Absa. So my sense is, and the way we look at this right now, is our ambition is really a Pan-African business. So we see ourselves very much as a Pan-African business. Maybe a lot of your listeners know us as a South African business, but I think maybe that's what comes out in the story. So as we see ourselves as a Pan-African business, of course, we have to plug into global channels. So even as we sit here today, we've already got a very strong channel into the UK. We've got an office in the UK. Just last week, I spent the week in New York. We've also got a New York office that we opened just over a year ago. And we'll look at other channels as well. So whilst we're a Pan-African business, we have to be plugged into the global, global corridors, and we'll continue to do that as we settle down.
I was with Absa more than 20 years ago, and during my time, I helped to open an office in Singapore, and that was one of the highlights of my career. Really, looking at that, is it still going? Is the Far East still part of of your footprint?
Yeah, so currently we're not in the Far East, but that doesn't mean we're not looking at that, at that channel. So if you look at the China corridor, it's a big global corridor. Obviously, currently there's a lot of geopolitical activity happening, and I think what you're beginning to see is Africa is very much in the focus again. So as we think about ourselves as a Pan-African business, there's no doubt in my mind that at some other point we're going to look very seriously at that sort of Eastern corridor. So my sense is that's very much part of our conversations going forward. Currently, we covered in the US, we covered in Europe. We're already doing some business out of the East, but we certainly would like to see ourselves setting up some form of office in that space in the near future.
How long have you been at Absa?
Yeah, like I've been in Absa for 25 years. So the way you got to think about that is, if you get registered on the asset register when you start, I'm already depreciated on the asset register. I've been part of the Absa journey for quite a while.
And becoming CEO, was that part of your ambition?
I think when I started an organization 25 years ago, I've already had this idea that I want to be more than where I started. So I think what you got to realize is when I started an organization, I started right at the bottom. I started in the collections department. So of
doing
course,
what?
Doing collections.
What does that mean?
Phoning customers to make sure that they pay the installments on a monthly basis. So starting in the call center right at the front, direct engagements with our customers. Already from early on, I got a sense of what it means to engage with customers directly, but I also got a sense of what it means to sit in a big structure and how you should think about being in a big structure. So early on already, I started sort of setting my ambition to be much more than just at the bottom end of the structure. So over the years, I successfully managed my career throughout the organization. So to finally be appointed as the CEO of Absa is obviously a wonderful achievement.
Many people say that that's actually the biggest advantage, the biggest asset that a CEO would have, having started at the bottom and moved their way through the organization. Have you got people around you in your executive committee who've had a similar path?
Alec, I think firstly, a system like Absa is a big system. It's a complex system, and the ability to understand that and understand that deeply, I think, is definitely an asset that you should have. Ideally as a CEO, but also in your broader executive structure. So, if I look at the Absa executive structure now, after we've made the changes, post my appointment, we've got just over 200 years of experience in the Absa organization around the executive committee. So you've got an executive committee that firstly understands Absa extremely well, understands our history very well, shares our views in terms of our ambitions and where we want to take this organization, but also understands banking, exceptionally well. If you look at our executive committee today, it's also a very diverse committee, So we've also got colleagues from Africa, on that executive committee. So we've got the right mix of people on our executive committee, to really start thinking about ourselves as a Pan-African business. We know the continent, we know Absa, and we understand banking. So it feels like our leadership is in a good place.
It also seems to be working. The market shares, after years of decline, have turned around.
Yeah.
Is that part of is that the secret sauce maybe that's turning Absa around?
Yeah, look, I think, in a system as big as ours, what you've got to understand, the decisions we make today reflects on the results maybe 18 months, 2 years, 2.5 years later. So the results that we just put out at this half year is a reflection of decisions we made since Barclays announced the intention to separate. So as a leadership team, we were always very clear in this process, very deliberate around what we wanted to be, our destiny to be post separation. So I think if you look at where we are today, you've got to go back and see what were those decisions we made at the time, what we had to deal with post that process, and how that got us to where we are today. So maybe something for us to just reflect on and talk about a little bit.
Yeah, that is interesting, because when you go through the academic books, they'll tell you that there are different levels of seniority, and the higher up the scale you go, President of the United States, decision you make today might only be impacted in 5 years' time.
Absolutely.
And within a big organization like yours, I can understand that. So what was it what were those stakes that you put in the ground, or what were the foundations that you put in back then, which are now coming to fruition?
Yeah. So it's interesting that you talk about the tenure and timing of decisions and impact of decisions. So when you sit at this level in an organization, you often think about tenure in 5, 10, 15-year horizons. So if we look at the last horizon, we had to deal with a couple of key issues post the separation of Barclays. So we think about the separation of Barclays as a gift to our organization. Mm-hmm. It was great to be part of a global organization. You've spoken about that earlier. A lot of lessons, a lot of changes in our organization since the acquisition of Barclays. So if you think about Absa pre-Barclays, it was a South African business with very small operations, in some of the African countries, and 1 or 2 offices in other parts of the world. But it was essentially a South African business. Today, Absa is a Pan-African business. We've got presence in 10 markets. We're a significant player regionally, and we have also got offices in the US, UK, and the ambition to go somewhere else. So it's a completely different organization. What we had to deal with since that process, I think, is a lot more than a lot of other executive committees had to deal with. So firstly, if you just think about separation. So we were fully integrated into a global banking system, fully integrated over a period of 15 years.
And they made a lot of the decisions. Barclays,
so again, you got to understand.
Did they make a lot of decisions from London?
So what I want to say to you now, again, as you think about this, when you're part of a global organization, you've got to be in the context of a global organization. Mm-hmm. And if you think about the Barclays Africa group at the time, we were about 20% of the Barclays balance sheet. So of course, they look at their global business and they make decisions around their global business. And, you fit into that process. So when you start thinking about things like strategy, for example, strategy is decided at a corporate level. So when we disinvest, or when Barclays disinvest and we become a standalone business, we got to own that strategy process now. And I think this is the important part of the conversation. So as part of that disinvestment, we had to deal with separation. And what I want to the message that I want to land here is, at that point, globally, a lot of banks tried separation. because you want to reflect on what happened post the global financial crisis and banks having to reduce their sort of impact and scale globally. So that was very much the Barclays decision as well at the time. So when we had to do the separation process, and the board and the CEO at the time asked me to lead that process, I couldn't find a successful example of separation anywhere in the world.
Wow.
So there wasn't a case study for us to look at in terms of how to do this. If you think about 3.5 years later, 4 years later, we've successfully separated from Barclays without placing our bank at risk. We had to sort of unplug all those touch points in the back end. And as I think about this, I remember when we documented this, we documented over 2,600 touch points with the Barclays structure that we had to untangle as part of this process. So that process took us 9 months. But the actual separation took us 3 years, and the final sell-off was only done, a month ago. So what I'm saying is you have to deal with this complex process of separation, which obviously forces your organization internally quite a bit, because you've got to make sure you do this successfully. Because as a bank, you're systemic. You cannot place that bank at risk, because it'll have a knock-on impact into the markets we operate. So not just that we separate successfully, we also had to rebrand in 9 African markets. So when you rebrand a bank, it's a very sensitive issue that you got to deal with. And remember, the Barclays brand was over 100 years in a lot of these markets. So that was a very complicated, complex process that we had to get through. That is now behind us. And this is very important in the context of the conversation in terms of what capacity we take with us going forward.
How much of your capacity was sucked in to the separation process? Because the way you've articulated it now, clearly, it wasn't just goodbye Barclays, okay, let's turn the page. It has been complex. It's taken you 3 years, and it would have taken a lot of your energy. Absolutely. That energy roughly how much is now available to be put elsewhere?
So I think, Alec, what's important is not just that we have to deal with separation, we also had to deal with setting up our own strategy, which took us most of 2017. And that was the first time we reset a strategy. So also when we did the strategy process, we wanted to send different signals into our organization, because we've been part of a global structure for such a long period of time. We've been part of this roll-up structure for such a long period of time, to the question you asked earlier. So even when we started the strategy process, we wanted to start sending different signals into our organization. So when we designed the strategy process, we had a core design principle that we wanted to achieve through that process. And that thing was a simple thing, but it was powerful. Because what we said is we want every colleague in the Absa organization to feel that their fingerprint is on the new strategy. You can see how important the strategy reset process was for us. So we were busy separating, we built a new strategy, and in that strategy, we were very clear on the first horizon, we want to reset ourselves as a competitive force, in all the markets that we operate in. So we talk about that first horizon as the fixed horizon. So we had to spend our management capacity on separation. When we started that project, we had something like 500 people working on that project full time. So this was the priority effort for us as a bank. This was the main thing for us as a bank, to separate successfully and make sure that we get that behind us. At the same time, we dealt a strategy. At the same time, we started repositioning our businesses. So if you look at the results that we just put out now, your earlier question around market share, is we dealt with all of this, and we pivoted our businesses to be a lot more competitive than what they were at the time. So if you think about our CIB business today, it's a completely different business to where we started. One of the gifts we got from Barclays in this process, because before we were mostly a retail bank. If you look at our retail and business bank, our market shares today is completely different to where they were in 2016. So when a mortgage business sits at 24% market share now, 16.7% in 2016, that is a transformational shift that we've gone through. So the key point to your question here is that with that behind us and the core team in place and the leadership changes that I've made since I've taken over, we've got a leadership capacity and a leadership resilience and a leadership commitment in our organization that is significant, because we had to deal with all of this, and we dealt with this as a team. So one of the core capabilities we take into this next horizon, when we start thinking about outperformance, when we start thinking about the vision now, we've got a leadership cohort and a leadership capacity and a leadership capability that I think is best in class. So having had to deal with this separation challenge, strategy reset challenge, fixing our businesses as part of this process, we can now take that full capacity and point it in the next horizon.
But But when you go through a fire, and I can see what you've spoken about, it does weld you together.
Absolutely.
But it also drains you. Often people need a break. They need a little bit of a sabbatical. And what you've just explained now must have been pretty tough, given all the challenges that came at you at once.
Yeah.
How do you rejuvenate that team, that core team, and indeed that everybody who works? How many have you got who work for you now in Absa?
We've now got about 38,000 colleagues.
38 is a lot of people.
35,000 colleagues. So Alec, that's a very important question that you asked, because it speaks to what makes organizations perform successfully, sustainably over time. So you've quite rightly sort of identified this horizon as a tough horizon. So when you turn a business around, when you fix a business, when you separate a business as complex as the one that we have, it takes a massive management effort. So as we think about the next horizon, and as I think about what's important for us to now start thinking about outperformance and sustainable outperformance, we've got to focus on other elements in our organization. So key effort for me in this horizon is organizational purpose. What does Absa actually stand for? Why do we exist? I can tell you in the last 3 months, the executive committee spent 2 days on this, really just understanding again what we stand for as a core bank.
And what do you stand for?
What's our purpose? This is stuff that we'll start putting into the market, in this.
But what do you stand for? What
in this next phase?
You're facilitating growth in South Africa through lending people money.
So again, a bank is systemic to the markets that it operates in. We got to understand that systemic nature of our of our entity, the means to an end. So the social upliftment that you get when you've got a healthy banking situation, and as a bank, you understand what your purpose is in that in that ecosystem, and that's the way we think about it. But not just that, Alec. We spent just 2 weeks ago. We had 230 of our leaders together in one place for the first time since 2017, first time since the pandemic, where we again spoke about what is important for us as a leadership. So why this is so important for me and for us as an organization on this next horizon is, as we connect with our organization, as we connect with our purpose, it helps us to deal with what is a sustainable culture that gives you outperformance over time. And at the same time, if you think about the other side of that coin, culture deals with your internal environment, to your colleague association with a brand, with a franchise, the contract that the colleague has got with the franchise. But at the same time, that allows us to also, again, renegotiate, reset the contract that we've got with our clients or potential clients, where we want to compete going forward. So sustaining this effort that you've just spoken about, reconnecting, the leadership and the people in our organization is all about our purpose. What is the culture that is required to sustain that performance, and how do we take that brand to the market in the next horizon? So as I think about the next phase, it's about what you would call organizational health. It's the softer stuff that we now got to start focusing on. So when you think about performance, it's the hard performance that is achieved through getting the soft stuff done well. And the soft stuff is the hard stuff, it's the tough stuff.
Yeah, it always is. It's very interesting the route that you're going to, market leadership, which obviously has to be your ultimate objective. And you contrast that with the current market leader, FirstRand, which had 3 entrepreneurs, very highly entrepreneurial business. You talk to the new leadership there, and they will tell you. In fact, Alan Pullinger will be in the studio tomorrow, be sitting where you're sitting tomorrow from FirstRand. And I'm sure he's going to say, yes, our entrepreneurial culture is alive and well. You having to tackle these guys by going to the top of a different mountain. But how are you getting your troops, your 35,000 people, to believe that you're coming from bottom of the big four, and you can actually become beyond where FirstRand's sitting today? Yeah.
So I think, firstly, what's important is the ambition that we set for ourselves now as a business, as a group. The personal ambition that I brought into this organization since I've taken over as the CEO. So clearly, what we said is we want to be a Pan-African bank that outperforms in the next horizon. The way we imagine that happening is to understand how we connect with our colleagues, what is the culture that we want to drive in our organization, how we think about ourselves as a diverse and inclusive population or colleague population. At the same time, we're saying that will reflect in our commercial outperformance in this, in this horizon. What we've got is we've got the credibility and the confidence of having dealt with probably one of the most difficult asks, in banking, not just in South Africa or Africa, on the continent, on the globe. So separating a bank, as I've indicated earlier, resetting a new strategy, taking control of your destiny, and gain what we've done in the last 3 and 4 years gives us, a confidence as a leadership team to say that, we can compete with the best. In fact, not just can we compete with the best, we think we can outcompete the best that's in the marketplace. So again, what we said earlier is if you look at our leadership capability that we've now got as an exco, over 200 years experience in Absa, well over 200 years experience in banking, and aligned in terms of what we want to achieve next. So leadership cohesion, leadership alignment, thinking about the culture of outperformance, what does that look like, how we lead that process, and then how we reset our brand, for us as the key elements of sustainable outperformance in the, over time.
And how do you measure that outperformance? What are the matrices that get you excited when you see a movement in them?
So, of course, the market measures us at outperformance, in terms of financial metrics, and returns that we give to our,
so share price,
share price, sort of total shareholder return, and then, of course, the metrics that we put in place as a franchise to deliver against that. So, again, if you look at our share performance this year so far, compared to our peers, you'll see the confidence that our investors has in us, that they have in our story, that they have in the leadership team and the vision.
They're getting this. They're getting the message.
They're getting excited.
When Kokkie Kooyman, who's been around analyzing banks for 30, 40 years and is one of the best in the world, when he said to me, go and look at Absa, go and see what Arrie and the guys are doing. And it's not just since you've been appointed CEO. It's almost like you've been on this journey now, your executive team, for a couple of years already, moving in that direction. So the message is being heard. But what do investors, what do outsiders, how do we rate, what do we follow? And I want to give you a little example here. Murray and Roberts company, very well. It's been a phenomenal business in South Africa. They have been on a 5-year turnaround. Their share price has dropped sharply, about half in the past year, as a result of not reaching the targets they were telling everybody else they would reach. When you read the annual report, it seems like there's pretty good reasons why they didn't get there, and they've only postponed it. That seems to be a danger when expectations are so high, and clearly at the moment expectations are very high for you and your team to get to this at least number 2 and perhaps even number 1 position. So how do you manage that process?
Yeah. So look, Alec, I think again what's important here is that when we started this reset process in 2017, one of the things we were clear about as a leadership team, and you're right, this is not about one individual, it's about the collective, is that we have to be very clear about what we want to do. We have to be very clear about how we want to achieve that, but also that we have to build credibility over time. So for us, it was about building credibility again by delivering against our promises. So if you can look at what we told the market, in fact, at the end of 2018, we actually held an investor conference. We said to the market, this is how you need to look at us. This is how you need to think about us. But it's going to take us, you're going to have to come with us on this, on this journey. For us, it was important to go on that journey to build credibility with the market, to build confidence in ourselves as a leadership team and as a business, and then to deliver against our promises. So when we think about this next horizon, it's all about ensuring, to the point you've made now, that when we put commitments out there, that we work as a leadership team to deliver against those commitments, irrespective, of what the market conditions is, what the macro conditions is. We'll adjust, depending on what is happening, because we also compete relatively to a market. But it's important that we take our investors on this journey with us. It's important that we take our colleagues on this journey with us, and it's very important that we take our customers on this journey with us. And in the last 2 months, I've probably seen 100 customers. Last week I was in the US seeing, multinationals. The week before that I was in Cape Town seeing corporate clients, seeing business banking clients, seeing retail clients, visiting branches. So as the CEO, I'm out there talking to customers, talking to colleagues, understanding what they hear, what they see, what's important to them. The same with our colleagues. So in this horizon for us, critical as part of this ambition is closer to colleagues, the culture point that I made earlier, closer to customers, the branding point that I'm making earlier, and just bringing these audiences with us as we go on this journey.
What do you need to work on most
as a group?
As Absa?
Yeah, as Absa. I think it's exactly what I've just spoken about now.
But where's a friction point? Where's a point that if you get that one right, it'll perhaps accelerate. It'll move the needle a little more.
Yeah. So again, I think I've already spoken about that a little bit earlier. We're very clear about what we need to do. And we worked hard at delivering against those promises. But we've come out of a very tough fix phase. So you got to reset where the energy in the organization comes from next. And that was the point I've spoken about earlier. So for us now, it's about making sure that we bring 35,000 colleagues with us on this journey. We bring our 10, 12 potential customers that we want with us on this journey. So if we breathe this oxygen, into our organization around adjusting our culture, evolving our culture to a culture that understands what it will take to outperform, how we reset our brand in the marketplace, how we reconnect with our customers and our clients in the marketplace. That for me and for us as an executive team is now the key source or the magic source in terms of our performance and our ambition in Horizon 2.
We've spoken a lot about the longer term, and every investor has to look at a company from that perspective. But in the short term, there have been some really big changes at the top level. I was looking at your executive committee pre your reign as CEO and post it today, and there have been major changes. Only 4 of the Exco in 2019 from your annual report are still on the Exco today. And by far, the majority of the 13 people, 9, have been brought in recently.
Yeah.
How does something like that happen, and how long does it take to settle that down?
Yeah. So Alec, I think what's important is the executive committee, the Exco structure, again, is a means to an end. So we're very clear about our strategy. The strategy is well settled in our organization. There's continuity in terms of our strategy. The question then is, what is the operating model? What is the structure that you need to deliver against that strategy? Now, for us, it's the accelerated delivery against that strategy. So when you look at the structure is a natural change from where we were in 2018 or 2019. So what we needed to do in 2018 off the back of that strategy was very specific to getting us through the first horizon. Getting us through the second horizon is this closer to customers philosophy, closer to colleagues philosophy that I've shared with you a little bit earlier. So all that we've done is we've moved from 2 businesses to 5. These are the battlegrounds that we've chosen that we want to compete in. 3 of those businesses are purely South African businesses. So your everyday banking business, which is essentially a retail business, led by Kokkie Kooyman. He's been in the organization for 15 years. If you're going to look at your relationship banking business, that is where we look at our relationship managed customer segments, business bank, private wealth. And we've got very specific segments in there, led by Faisal Keys, 25 years in the Absa organization. Product solutions is a very specific business because it deals with very bespoke products in our market that's core to our value proposition. Jeff Lee leads that business, been in our organization for 16 years. And then we've got a very strong focus on our businesses outside South Africa to the Pan-African point that I've made earlier. Xavier, who leads that business, has been with us for 15 years. And then you've got Charles Rousson, who leads our CIB business. He's an experienced Absa campaigner. And you've got people like Jason, Dion Raju, who leads finance and risk. So you've got a very clear business model that focuses on a very strong commercial approach, focuses on a very strong market approach, supported by very strong functions. So it looks like a big change, but it was always a natural change that was going to happen at some point. Now is the time for us to make that change.
And people who are bedoned at not being number 1, presumably, and they want to actually turn you around into the top of the pile.
So that's quite an emotional word, quite a strong Afrikaans word. You've got a bunch of leaders that are serious around where they want to get to. They're connected with the organization. They believe in the organization. They've been part of this organization. Plus, they've been part of getting us through this first horizon. We said earlier that was a tough ask. So, people get united when they deal with tough issues. If I think about how our bank dealt with the pandemic and just the posture that we put out there, as a franchise, that's actually what we stand for. As Absa. So you've got a team that is aligned on the ambition. You've got a team that is united around what needs to happen next. You've got a team that is connected to the purpose of the organization. They know what changes we need to deliver to build the momentum in this next horizon. Is it going to be easy? It's never easy. This is a big franchise. The market is tough, but we've got the structure, we've got the team, and if you go and look at the team below that now, we've just expanded our senior leadership group. So we've taken it from 150 colleagues with this change to about 230. All of those changes we've made come from our own timber. Come from people that have been in our organization for a long period of time. So the leadership unitedness, the leadership cohesion, the leadership contract with the organization is stronger than what it's ever been before.
Arrie, it's been really good talking with you, getting your strategy, a better understanding of the new boy on the block now, 6 months in the saddle, and I look forward to following your progress and that of Absa's over the years to come. Thank you for joining us. And Arrie Rautenbach is the Chief Executive of Absa. I'm Alec Hogg from BizNews.com.